Good morning and good Friday morning, 3/23, 2012. What's good about it? The topic, weekly options expiration. It's a Friday calendar weekly options expiration. The art of making a market between both the long side debit and the short side debit, and that's when the long side would equal the bull breakouts, and the short debits would equal the pullbacks within bull rally trends and how they get exhausted in price action. And this is pre-market, by the way. And the real title, weekly options expiration. And why is the weekly so much different than the actual monthly? And we're an expert in the option pit when it comes to pricing and getting wholesale bids because we do it live every day, just like we're doing right now. And the thing about it is understanding the inside gimmicks, the things that go on in option markets, such as pricing, the premiums, taking the value away. So you have to be wholesale to the entry. And we will be covering the pre-market section. One of the things that we're going to talk about is the Google going back up to our 670 target again, and then and when we break through there, the market is ready and ripe because the broader market is all overbought in this bull rally. So as we've been saying, the 2 to 4 week process to what pullback, bull side pullbacks, bull market pullbacks are about, and how you would look for the quality of those. And options expiration weekly has changed totally in the pricing in both sides. Whether that's a 655 put and this is a 640 call over here, they both have values. This had a $6.90 range. You couldn't ask for any more than that. If you're getting hit down here at $3 at our wholesale bids, selling up there on those highs, hey, you're having a good time, but you got to know how to sell them too now. You just don't let them go up there and sit there and price. No, not when you're wholesale. So now over here on the put side, that's a 655, and it expires today. It's a weekly $10 range. Last print was 950. Bid and ask on this weekly 655 put within the trend structure of Google and how Google can go up to the 650, 250 area, which will be an area that I'll be looking at in its trend. Of course, there's other areas before that, but that's the upper area. And how would I trade this side of the market wholesale as they pull their little gimmicks on people? Okay. How do I get wholesale? They cannot stop me. This is the place you're going to want to be because we'll be doing this live. It's now 5:51 a.m. Pacific Standard Time. We'll keep the series short. One of the things that we'll say in pre-market here now is one thing. Apple Computer closes at 59.34 with a bid of 599.50, 599.61. That's the bid and ask. Okay. 599.60 printed. And you can see the bid and the ask. So one thing we're seeing in Apple this morning compared to the last 5 trading days now is that we're not seeing that left elbow gap down, nor are we seeing that right elbow gap up in price, but rather remaining flat. And remember, we were shorting it right up there below that $610 area. And the whole thing about the reversals, and that's on the top side of the market. But when it comes down and hits those lows, when it comes down and hits that -1 delta or 3/4 delta, that thing bounces off of support and doesn't look back and usually runs for about $5, as you know. So once again, MMTs, the debit structure in the trade management is wonderful and very inviting. To understand that Apple will bounce off the lower support levels and stay within its exhaustion high level ranges until it has another one of those $22 down days like we shorted last week that we all did together when we started covering it. And we're only covering it because bull price exhaustion gets overbought, and the skill is for you to get paid on that side of the market when they're that overbought. They have to pull back, let some of that new money off the sideline come in, and start buying equities. So within bull rally prices, weekly options expiration series, and it's 323 of 2012. We've been making markets at wholesale bids. I'm going to be doing that 655 put right here, 323 Friday today. And throughout the day, both the call side and the put side will have wonderful entry opportunities at the wholesale bid, the wholesale price to sell back to the public. That's the focus. That's the focus. So as we start this wonderful Friday at 5:54 a.m. Pacific Standard Time, 323 of 2012, we will work with the trends. We will be watching the price lines. We'll be doing everything that we do. And on this options expiration, we will trade them right up into the closing bell. Because as the trading day goes by, in certain hourly increments, premiums will change again, price premium. Oh, yes, they will. So what happens is that you can make markets very quickly, but you better get in. Once you get in, you better have that limit order out to sell, whatever, whether it's the call or the put, because once it hits those higher levels on either side, they're going to retrace, and you want to sell and execute up toward the highs now. Okay? Because throughout the day, the premiums will change in here. And the premiums over here in that 640 call. Look at that 640 call. And look at that 640, 605. It's not gapping down. It's not gapping up. They're flat going into the weekly options expiration pre-market preview. MMTs, market maker traders. Watch the price line today and see if we can get this price line up to, let's say, 618.5, up toward that 620 handle, and start looking at that. But what's that lower support level? They had $1,000 upgrade on it the other day. Okay, one of the analysts did. I remember that kind of behavior in 1999. Yeah. So you take it for what it's worth, but MMTs, let's see what that upper end of that price level will look like. Should we go up through that resistance area in the price to those levels, we would look at where that reversal would be, but how you can get long up to those resistance levels and then sell short, and then when it comes back, buy at that support level. So this one here, I can tell you, I will go to the price line, and I just want to show it because it's going to be a weekly options expiration. So I'm going to show the 720 right here that was marked down. And this is a price line, 323, 2012, 720 put. They expire today. And how to get the wholesale price and sell it back to the public. The range on it is $8.30. Okay, the last print is 8.7 minus 7.3 ratio, $7.30. Now, where do I get my bid? I'm going to tell you where to put that bid right now. You're going to put that bid at $4.7 right now. In case I walk away from this side of the market at $8 and you're down there, MMT, as a making that wholesale price level, put your limit orders out there now in pre-market. The time, 5:57 a.m. Pacific Standard Time. Weekly option, 720 put, how to trade weekly option premium and make a market within the public structure and sell it for a profit. What that talent is all about is getting that wholesale entry. Once again, welcome to the special series on weekly wholesale pricing and options. So there's my 720 put, okay? And here's my price line. Here's my close. Now, if they run that straight up to resistance and they bring those premiums down there and you get hit, you stand to make at least $2 off the low. Other people that like the videos, if you want to sign up for the new options alert service, you can. It's well worth it. It is expensive, but that's what, as long as you execute them right at the wholesale price and sell them, well, you're going to come out ahead. Bottom line, we do it live and it's real. We have all the trades at these wholesale levels. I already gave one out right here at $4.70. It's a weekly, 3/23/2012. Last print was $8.70 now. And I will make wholesale markets wherever they come into play. Just remember, I never see those prices if they don't run this up toward that 618 to 620 handle now. And the equity has to go higher. So let's keep that reality to drop the price over here, MMT. You have to run up, hit resistance, drop the price down, get in, and then they roll it over. There would be a reversal confirmation at that point. So we'll remain there. What else will we be doing? Lots of things. We'll be looking at this LinkedIn was a trade that people were looking at. Doesn't have a lot of volume, but the CRM trade right here it got up toward our price target of 155. We talked about how to buy that down there when it was at its bottoms, along with many others, and that have gone up $10 to $13. And those are overnight positions like this one. However, watch this target up here at 155, everyone, on the CRM weekly.